A Trump and Modi exchange on continuing US-India trade talks and a conversation soon lifts sentiment. Stocks of exporters rally, IT and industrials too clock gains while auto and consumer durables drag.
Urban Company launches its 1,900 crore rupees IPO, joining the list of marquee platforms coming to the public market. CEO Abhiraj Pal tells CNBC-TV18 that the company aims to continue growing at the same clip and its earning nearing break-even.
Stocks of exporters of shrimps and other marine products rally after the Commerce Ministry says the EU will open up its market further to an immediate 20% increase in exports. The thaw in India-US relations also rubs off.
Vodafone Idea has knocked on the Supreme Court's door again, this time against an additional AGR demand raised by Department of Telecommunications. The telco is seeking quashing of the demand and a review of the AGR map. Hello and welcome to a halftime report live from the CNBC-TV18 Motilal Oswal studio. I'm Ekta Batra and with me is Mangalam Malu as well as Vinny Motiwala. Well, it's turning out to be a session where we are seeing some reprieve in the markets considering the positive commentary or the exchange of words which have taken place between the US and India when it comes to the tariffs. So we do have the Nifty, which is up around 0.4%. We have the mid-cap index or the broader markets, which are outperforming at this point in time. Mid-cap index up 0.7%, advanced decline ratio in positive terrain at 2:1. So no complaints coming in, may it be exporters, may it be the shrimp stocks, all of them doing well in today's trade. Hi, guys.
Hi.
Hi, go ahead.
So it's a good day coming in, and IT, that's what I want to talk about as well, because second consecutive day of gains, finally it's making that comeback as well. So keep an eye out on the IT pack today. Also, Infosys is managing to hold on to gains. We have HCL Tech and obviously Oracle Financial Services. That's something that's buzzing in trade as well. Other than that, PSU banks, Mangalam, that's also something that's buzzing.
That's buzzing as well. And what's interesting is that we have some traction seen in a lot of these defense names. Yesterday it was the railway names, and today we have a bunch of them. HAL doing well, BEL is at the high point, and the mid-cap IT pack, like you guys pointed out, doing extremely well. Let's see where it goes. We're very close to important technical levels on all the frontline indices. But over the last 6 or 7 days, the story has been consumption, the story has been GST cuts, the story has been impact of GST cuts on a lot of the consumer sectors. We here on CNBC-TV18 have been speaking to consumption sector leaders across the board, be it biscuits, aerated beverages, dairy, and even namkeen and snacks. So let's start continuing our conversation around the consumption space itself. Rigan Retata, who is joining in from Gopal Snacks as the CFO, joins in, and our discussion obviously will be centered on the 3 important points. One, the impact of GST cuts on snacks, and more importantly, the challenges in passing them to the consumer, capacity expansion via third-party manufacturers and their own plants, and the outlook on raw material costs, as well as the current demand environment, as it were. Thanks a lot, Rigan, for joining in. The obvious question, we had the management of BKG join in earlier. They expect an incremental 3 to 5% volume growth on account of the rate cuts that have come by. I suppose yours would be somewhere similar as well. But the bigger challenge now is passing these cuts on, because for players like you, where nearly 80% of your revenue comes in from 5 to 10 rupee packs, you can't immediately increase your volumes. So can you tell us about the incremental volumes that you will see, and by when will new stocks hit the market earliest?
Yeah, so good afternoon, Mangalam. So yes, we are also definitely, like our Vikaji said, we are also expecting the increase in the volume, and our 70% of the sales comes from around 5 rupees SKU. So over there, we would be targeting to probably increase in the grammage, and in the high rupees packet, we would be the mixture of both the things. It would be lower of the prices and also increase of the grammage.
Right. How much increase in volumes will you see? And by when will the newer packs come to the market? Because some believe that September 22nd is very small a window for all the companies to go ahead and bring out all those new stocks in the market.
Definitely, as far as volume is concerned, yes, we would be expecting somewhere around 5 to 6% of a volume growth. And 22nd of September, yes, it's a definitely very short window, because there will be some stocks lying at the dealers level. There will be some lying with the various MT and the quick commerce kind of a channels. So we would be coming out with the fresh packets probably once we have a clarity on the things like how much dealer stocks, whether we would require to do anything on that front. And probably we are targeting to somewhere by the end of this month, we should have proper clarity on that area.
Okay. All right. Just wanted to, get a sense in terms of the entire demand picture for the year. Q1 was weak. You have this GST consumption boost. Are you now assuming that maybe the remaining 3 quarters or the second half of the year is going to be much better than what was earlier anticipated? What is your overall guidance in terms of volume, revenue growth, profitability, margins? What can you guide us for in the remaining part of the fiscal?
Yeah, so definitely the GST rate cut is another legs up to this consumption story, along with whatever government has done in last few months, whether it is a tax rate reduction or the interest rate cut. So all this has definitely boosted up the more money available to the consumer, and also consumer space will have that additional volume growth coming in. So as a full year, as per our earlier guidance, we stick to that guidance currently. We are targeting 15 to 20% from the baseline of last year as a revenue growth, and we stick to that. Now we would be chasing on the higher end percentage rather than the lower end percentage of that thing. And as far as margin guidance is concerned, we would be targeting an EBITDA growth of in absolute value of around 20 to 25% kind of a thing.
Okay, 20 to 25% is the overall EBITDA growth in absolute terms that we're watching out for, and top line growth you're maintaining at 18 to 20% is what you're saying for FY26, right? And despite that boost and festive season coming in, you don't think this could lead to a better growth rate, given that, there is some fillip coming in, there's good monsoons as well for the consumption side, and this GST boost. You don't think that you could do slightly better than that?
No, so it would be better, but we would like to take this as and when it comes, because our Q1 numbers were slightly subdued on account of our internal supply chain issues. So on the full year basis, we maintain the guidance of 18 to 20%.
And do you think in terms of packs also which you are selling, so smaller SKUs, maybe that would see a more boost coming in, or what is the understanding right now you're picking up here?
See, in terms of packages, yes, smaller packages or the higher package, everywhere boost would come in, because the rural demand was obviously not much of an issue. There was an urban demand which was little bit on slowdown. So we expect much more demand coming in from the higher packs where the urban consumption story lies.
Okay, so you're seeing some kind of incremental move in terms of the urban demand. Just before that, you had come out with some news with regards to the distribution changes, your third-party agreements in Karnataka and Uttarakhand. Just give us a sense in terms of what that means for business for you.
Yeah, so we have entered into 2 long-term agreements. So one is based at Hiriyur location, that is part of Karnataka. And another one is at Kashipur, that is in Uttarakhand. So both these agreements are part of our long-term strategy to have a deeper penetration in southern India as well as deeper penetration in UP, where currently our sales mix is around 4%. So both the plans would definitely help us in terms of increasing our sales over there, and also the timing or the lead time to reduce the lead time by around 50% in both these areas.
Right. You said that you maintain your 18% revenue growth and 25% EBITDA growth guidance for the year, right?
Right.
But that means that for the next 3 quarters, you'll have to grow upwards of 25%. 9% was the decline that we saw in the first quarter, and EBITDA was all but negative. It was 63% lower, all 15 crores. So you think you will be able to do that, or would that fall short of expectations?
No. So, see, we had the major fire incident at our Rajkot factory in December. So, in June quarter, our numbers were subdued mainly on account of that supply chain issues that we were facing. And now, since we would be commissioning our Modasa facility by the end of this month, so we are expecting the supply chain issue to be resolving, and that should lead up to betterment of our revenue, and also now GST rate coming in. So this is an added advantage for us.
All right. And how much is the revenue potential of your Modasa facility and these third-party plants that you've tied up with? Together, what is the incremental revenue potential?
So there's incremental revenue potential for the Karnataka plant. It is roughly around 90 crores, and for the Uttarakhand, it is around 100 crore rupees.
And Modasa?
So Modasa is not an incremental. So it's
Yeah, I mean, the plant by itself, how much can that contribute?
So, see, it would be around 7 to 800 crores, but it is not incremental capacity. That is what I want to clarify. So, it's an replacement of Rajkot, what was capacity. So, 60% is at Modasa and balance 40% would be restored at Rajkot.
Okay, just quickly before we let you go, I know Q1 had some exceptionals, but what is a normalized margin state for you all for the remaining part of the fiscal?
See, gross margin that should be normalized for this year. That is, we are expecting somewhere around 25 to 26% as per current raw material prices.
All right. And volume growth for this year would be how much?
Volume growth should be around, we are expecting 4 to 5%.
Okay.
All right. We're going to let you go on that note. Thanks very much for joining in and speaking with us. So that's Gopal Snacks. The stock is up around 1%. They're sticking to their revenue guidance of 18 to 20% in terms of revenue growth. For FY26, they do see the GST rationalization definitely coming in as a boost in terms of their sales. We'll take a short break, but up next, we'll get you more in the markets and we'll focus on our segment, Movers and Shakers, which will get you the top stocks which are moving at this time. Stay tuned.
Giving hyper-local a completely new meaning,
Absolutely.
isn't it?
There is one consumer base in the same geography that are looking for cheese. There is another consumer base that is looking for paneer. So the way our assortment comes in, it allows for that level of identification.
Is it still about the 10 minutes or has that changed significantly?
A consumer that depends on quick commerce, when they come up and fire search for the item that they look for, needs to be available in less than 10 minutes.
Welcome back to Halftime Report on CNBC-TV18. 24,990 around that mark is what the Nifty is trading at, up around 120 odd points in today's trading session. Apart from that, we have textile stocks that are buzzing in trade as well, whether Gokuldas Exports or Welspun Living. And obviously, this is because of the positive commentary exchange that we have coming in between Donald Trump and Prime Minister Narendra Modi in terms of tariffs and the conversations going positive. But which are the other movers and shakers? And in that segment of us, we are going to track a whole host of these other stocks that are buzzing in trade today. First up, let's go across to Ria, who's going to talk to us about Indian seafood exporters. Ria.
Well, yes, the European Union has now approved 102 new fishery establishments for exports to the EU, and this move is expected to add around 16% additional export establishment in terms of trade volume. The Commerce Ministry also anticipates an immediate rise of over 20% in trade volume as a result of this move. Now, India's marine exports to the European Union were valued at around $1.1 billion in FY24, and the Commerce Ministry has also said that India had been engaging with its EU counterparts over the past 3 months to address sanitary and phytosanitary issues, and following some technical level meetings and negotiations, all the establishments that were earlier delisted due to these concerns, due to contamination concerns, have now been reinstated. So this is a big positive for the entire industry as a whole. Now, in addition to this, the Commerce Ministry has also said that this move is a positive sign for the 13th round of ongoing FTA negotiations between India and the EU, and the listing of these units by the European Union was a long pending booming demand by India. Now, in terms of the impact for most of these stocks, for Avanti Feeds, 17.4% of shrimp feed revenue in FY25 came from Europe, and they are already working on expanding their presence in non-US markets, including the European Union. For Apex Frozen Foods, around 39% of their overall revenue in FY25 came from EU, up from 26% in the previous financial year. And they've also said that they saw robust demand from the EU over the last 1 year, and they continue to strengthen their presence in the market. Some other listed players that also supply to the European Union include Coastal Corporation, Waterbase, and IFB Agro. And on the back of this, all of these stocks have been trading higher in today's session. The top gainers include Apex Frozen Foods and Coastal Corp, 20% limit up for each of these. For Avanti Feeds and Waterbase, they are higher by around 13% to 11%, and IFB Agro also trading with gains of 2% today.
Okay, all right. Thanks very much for that. So definitely a lot of those stocks buzzing in trade today. But Vikram Solar is in focus on the back of its Q1 numbers. Vivek is here to tell us more. Vivek.
Well, that's right. So Vikram Solar, remember, this is the first quarter that the company is declaring results after its listing. The company listed in the last week of August. And when they listed, they had actually told us that this particular year they are expecting to see a top-line growth of close to 30 to 35%. But Q1 has been exceptionally strong, in line with what most of the company's peers have done. You remember, Wari, Premier, all of these companies have come out with very strong set of results in the quarter gone by. So solar cell module manufacturer, revenues have almost 80% on a year-on-year basis. EBITDA more than doubling, 2.2 time growth. EBITDA margins up almost 350 basis points. Well, profitability is up almost 6x of a lower base. Order book very strong. There has been order book accretion since the IPO itself has come. So close to 10.96 gigawatt order book at the time of listing was close to 10.4 gigawatt. Three key orders that the company has received: one from the Bondada Group in Maharashtra for close to 250 megawatt solar module supply, another one from GIPCL close to 326 megawatt, and day first the company told the exchanges that they received close to 336 megawatt order for solar module supply from L&T. So order book accretion has been quite strong, and the order inflow too has been quite steady for Vikram Solar.
All right, take that point, Vivek. Thanks a lot for that, up 7% for that stock. But one stock which is lower in today's trading session, nearly 19%, is Car Trade. Sudarshan joins in. Sudarshan, what's spooking the stock?
So stock is under pressure, currently down around 8 to 9%. It has made a minor recovery from days low. At one point, the stock was down almost 18 to 9%. But the stock has recently outperformed. If you take a look of 2025 performance, stock is up almost 50%. And from 52-week low that stock had seen in October of 2024, from that level, stock is up almost 200%. So why is the stock under pressure today? So JM Finance brokerage firm has come out with a note, and it has downgraded the stock to sell from hold, and target price is rupees 2,350. So mainly valuation concern that JM Finance has talked about. It's saying that stock is currently trading at 43 times FY27 estimated EBITDA multiple, and it's too rich for a company that generates almost its entire revenue from B2B. And while demand boost does not necessarily result in a increase of segmental revenue. Here, segmental revenue means the revenue for the auto segment. Also, it says that while OLX recovery sounds positive, it was as per expected, and recent surveys that JM Finance has done, it suggests that a significant rise in the use of generative AI tools versus Google search, and that JM Finance believes that it can be a risk going forward for the company.
Okay, Sudarshan, thank you so much for that. Car Trade today down 9%. But let's move on to a stock that's been buzzing in trade today, Oracle Financial Services. Reema is joining us to give us the details on this one. Reema, afternoon.
Well, the key reason is its parent company, Oracle Corp, came out with numbers yesterday, and the street loved the guidance on AI and cloud. Oracle shares popped 28% in after-hours trade, and Oracle Corp is the parent company of Oracle Financial Services, OFSS, with about a 72.5% stake. Two quick reasons what the street liked in Oracle's numbers. One, the cloud orders, which went up 350% on a year-on-year basis, and two, the projections on cloud revenues. So this year, Oracle is saying their cloud revenues will go up 77% from almost $10 billion last year to $18 billion. And not just that, by 2030, in 4-5 years, they're projecting this number to be $144 billion. Now, what is the read-through for the Indian subsidiary, Oracle Financial Services? The current quarter's numbers, take into account OFS's past quarter's numbers, June ending. So we already know those numbers. But generally, because it's a majority-owned subsidiary, its numbers would be consolidated. But what the street likes, it's the future outlook for Oracle Cloud. And even the OFS's, uses the cloud products of Oracle. It's just that they use it only for the banking platform, for the financial services verticals. So the street likes the forward guidance because this, in a way, includes what's happening here with India as well. But even for the IT services, there is a broad rub-off. The big narrative was that AI is negative for IT services companies. It's deflationary. It will eat into IT services companies. But what Oracle's numbers show is that for AI, you need cloud migration. And to help with cloud and to help with the implementation, you need IT services companies in the business that they do, which is why generally you're seeing this optimism in the IT services revenues. And not to forget that OFSS has also been an underperformer. The stock has fallen 30% on a year-to-date basis and much lower compared to its all-time high price of 13,220. Back to you.
Okay, all right, Reema. Thanks very much for that. So those are a lot of the stocks that we're covering in our M&S Movers and Shakers segment on Halftime Report. As you can see, all of these stocks are buzzing around today. But we're not done with all the stocks that you should be keeping on your radar. We now have Vivek here with us to take us through all the stocks which are moving around in our buzzing stocks segment. Vivek, over to you.
Well, dominated by news flow, dominated by brokerage upgrades as well as downgrades, and a whole host of stocks, especially from the broad end of the markets that are seeing all of the strong moves. Ria did tell us about the shrimp stocks, all of them doing very well in the session. Avanti, Apex, Coastal Corp, all of these stocks some of them even at the upper circuit. The other set of stocks, on hopes of a trade truce, is the auto ancillary packs. All of the stocks that go ahead and export to the US market, Bharat Forge, Samvardhana, Motherson, these stocks too are doing quite well in the session. The other set of stocks, after a while, that are seeing some buying interest emerge is actually the PSU banking space. So held and helped by SBI, up almost 1.5%. Some of the other names like Union Bank, Indian Bank, all of these stocks up over 3% today. And the mid-cap IT space, aided by the fact that globally Oracle Financial has upgraded the revenue growth guidance. Look at some of the moves over here. The Indian OFSS is up 9%, persistent emphasis, Coforge, even a name like Tata Elxsi, all of these stocks up anywhere between 4 to 10%. The other set of stocks that are seeing some selling pressure emerge are stocks actually from the auto space. They've actually seen a one-way rally for most of these names, but today seeing a bit of profit booking. TVS Motor, Apollo, Hero Motor, even a name like M&M, all of them have cooled off significantly from the day's highest point. And cement stocks, after a while, remember Q2 is expected to be quite muted for the entire cement space. All of these stocks are not falling too much, but a bit of profit booking from the higher level is what you're seeing in the cement space.
All right, we take that point. Thanks a lot for that, Vivek. All those stocks which are buzzing around in today's trading session. Take a short break, come back, focus on trading strategies. We have our technical experts joining in with us. Pritesh Mehta of Yes Securities has some trading strategies.
Welcome back to a halftime report on CNBC-TV18. Again, the Nifty is inched back near the 25,000 mark. And what we're seeing in terms of an outperformance is that's coming in from the Nifty IT side, mid and small cap. That's also managing to hold on to gains. In the last few odd 20, 30 odd minutes, we've seen Nugent Software. That's again buzzing in trade. We have Shoba as well as Alembic Pharma that have picked up some bit of a pace in the last 30 minutes. But it's time to bring on Pritesh Mehta of Yes Securities to talk to us about the technicals of the market. What are we keeping an eye out on? Pritesh, good afternoon. Thank you so much for joining us on the show. Let's talk about the levels that now we should be keeping an eye out on. Today, we did touch the 25,000 mark, but if we manage to close at those levels as well, what are we watching out for now?
Good afternoon. Now, see, it's good to see markets in green today, but we need to look at the broader perspective when talk about Nifty. I think, when we look at the EM's basket, we can fairly say China is outperforming India now for last 1 year, and this trend is going to continue. So I think when we talk about index from a broader perspective, the range is still intact. What we have seen since the month of May, 24,200, 25,600. I think this will continue. From here on, we can see up move towards 25,200, but the larger trend is going to be intact. So I think it is more about stock selection rather than index direction, because this theme is going to play out for at least next couple of months. Broader market has a different thing altogether. When you look at the breadth of the broader markets, it is improving. So I think rather than focus on the index direction, there would be plenty of opportunities in stock selection.
Okay, what would your stocks be, Pritesh?
So from the broader markets, we like something like Electra. Now stock went through a big corrective move since March 2024, and now we can see base building ankle column follow through on the point of figure chart. So as per my projection, the stock can move towards 2000 levels. The stock would be around 1520. The second one which we like is BEL. Now see, this defense index is doing well, our customer defense index. Now BEL has formed a good basing pattern, now trying to surpass the downward sloping trend line. So here on we can see a move towards 425, 430. The stock would be around 365.
Okay. Pritesh, what's your thought also coming in for IT, right? Nifty IT, because that's seen a bit of a revival in the last couple of days, and it does merit it because the fall that we've seen before that is sharper. So Nifty IT, anything that one should watch out for on the technical fronts?
Yes, I think we have been keeping a close eye on the ratio of IT versus Bank Nifty. Bank Nifty last 1 month or so, it has been a big underperformer, and IT is now showing signs of bottoming out on the ratio at least. So we can see some follow through coming in. Last 2 days, we have seen IT stocks doing well. I think there is still more steam left, and we can see, mid cap is one space which we like. Something like, of course, Tata Elxsi, it will do well. From the large cap side, HCL Tech and Wipro would be our top bets.
Okay, definitely a relief rally coming in for the IT index today. Thanks, Pritesh, for joining in and taking us through all the stocks that you're tracking. Well, those are a couple of technical calls to keep on your radar, but let's go across to Manglam. He's here at our CNBC-TV18 F&O desk to tell us what he's tracking in the F&O space. Manglam, over to you.
Well, it's good going for the market so far. We have two of the more powerful engines of the index firing up ahead today, and this after a spate of underperformance. We have the Nifty Bank, which is doing well, and alongside that, we have the IT pack as well, which has been gaining over the last 2 trading sessions, continues to do well. And in doing so, they've also crossed past important technical levels or are nearing important technical levels. So if you look at it, the Nifty is above that 50-day moving average, a level that it hasn't crossed in a very long time. The Nifty Bank as well is very close to its 20-day moving average. So crossing and staying above that would be extremely crucial. And for the IT index, after 2 days of rally, it's crossed past its 50-day moving average, so hovering just above that. And all of this comes at a time when the India VIX is moderate. So that's positive news for the bulls. It's holding around that 10.68 mark, so that's contained. And we've seen some short covering in calls. So the 24,900 call comes up for you. The open interest out there is down. The premium is up. That's telling you that the shots on those calls have been caught on the wrong side. The 25,000 put writers are fairly active in today's trading session. That tells you that maybe the street believes that the support for the market has moved higher, closer to 24,900 to 24,950, which was an earlier resistance mark. But still, we have seen writers at the 25,000 call fairly active, and that's largely because of a couple of factors. One, because of the rally that we've seen in the last 3-4 trading sessions, the put-call ratio has moved to 1.26, which is the higher end of the range. So maybe we might have come to the near-term, end of the higher end of this range. So that's something we'll watch out for. And the second part is 25,154. That is an important mark because the Nifty, touched that mark on August 21st when the Prime Minister made their speech after on the Independence Day, and thereafter we saw that rally. So from there we saw a big decline closer to that 24,500 mark. So this is an important mark to watch out for. A lot of stocks on our radar, IT stocks, everyone's been talking about that. Look at the long positions added on OFSS, Emphasis or Cyient, and the shorts who were caught on the wrong side in stocks like Tata Elxsi, Persistent Systems and KPIT, all of them covering their position. So these stocks are higher on account of that.
Okay, Mangalam, thank you so much for that. So that's the update coming in the world of F&O. But on that note, we're going to slip into a very short break. And on the other side, we'll talk about commodities. Manisha Gupta will join in with us, and with her will be Sachin Jain of World Gold Council. Stay tuned.
Welcome back, and joining us on the show is Sachin Jain. He's MD World Gold Council India and joins us on the show. Sachin, hi, thank you so much for joining in. Before I go to anything else, it is have to be about the gold price is at all-time highs. What is your sense? I mean, I remember we spoke earlier and you had unofficially told me that, yes, you are bullish on gold and the prices could be much higher. With almost 40% done in this year, how are you looking at it?
Manisha, first and foremost, my big thanks for having me on your platform. And I always truly appreciate the transparency that you bring out to the audience. Now, to the price of gold, absolutely the center of the conversation. And if you go back a month, Manisha, not too long back, our indication was that the price of gold might get to between 5 to 10% by end of the year, higher than what it was at that level. And at that level of IIJS, which is beginning of August, we'd seen a bit of stability over the last 3-4 weeks. Now, what's transpired right now is that those levels have already been crossed. But we foresee that, will it go with the same rapid speed for the next month? We think it will be a little doubtful. I think what it should sort of settle at this level, and some stability can be seen.
Sachin, where the gold prices are right now, and because we're getting into the Indian festival and wedding season demand, I did see the World Gold Council's campaign about the moment is gold, quite freshly done, nicely done, and done with the younger generation. We all do understand that India has bought gold for many years, but how have you seen the 20s and 30s now react to gold at these current levels?
Well, actually, Manisha, we've seen a lot of buoyancy in the gold in general. But if you see mid to long term, the success of our industry will only lie if we can have a strong relationship with the younger millennial. The reality is that on the 31st of December 2024, 72% of India is millennial or younger. And as an industry, we need to get ready. And hence, this campaign is focused on building the relationship of gold with the younger audience, not necessarily with only new trinket and light products. And we think there's a lot of scope in building relationship with a bit of traditional jewelry, a bit of more meaningfulness, a bit of new ways of wearing. And I think this campaign that you've just seen launch is just the beginning of about 8 different areas of life, and that will help connect the new age consumer in the way of wearability, a relationship with gold. As we move forward in the campaign, we will also open this campaign up for industry participation, and the wide industry can get the benefit. And make the concept is the moment is gold means essentially it's not just only the big occasions, but just the lighter moments of everyday happiness that can be celebrated by gold, and that's what we're trying to reflect on.
I know it still is early days and the campaign is just very timely right now. But at these higher levels, would you say the budget buying that India does in sense of gold during this period of time perhaps could hit the volumes overall?
Well, I certainly think that we will see a drop in volume overall for sure. Now, would it be a very sort of significant number? I can't say right now, but certainly there'll be a drop. Having said that, the interest of let's say a value buyer that you mentioned, if the budget was 100 for investment in gold or buying gold, that has certainly gone up. The consumer is buying more and perhaps cutting on other areas because it's really at the center spot and center stage right now. The prices, the excitement, the confidence, and with this increase that we see now, and we really hope that price gets more stable. And I'm pretty buoyant that this coming season perhaps will be one of the strongest seasons that India has ever seen.
Sachin, what's your sense on the gold imports in this year? We've done almost, let's say, 75% of the year.
I think certainly there'll be a drop, Manisha, and a lot of increase that we've seen is on the recycling, not gold moving out of the gold, but gold getting converted into gold. And I think the numbers certainly will be down. To what percentage? I'll be able to comment on that in the coming couple of months.
Sachin, one quick final one. And what really is your sense on the kind of caratages and lightweights that we seem to be looking at right now? You think that would work more this season?
Well, I think there's been a more conversation, Manisha, that we should jump on 9 carat, 14 carat and all of that. However, when we talk to the consumers, and that's based on the consumer research, the movement of gold is based on the value that gold ascertains, and hence also the purity of gold. And I think it's always good to have the options more on lighter weight and all of that. But I think the fundamental of why gold is at the center stage is for the value perception. And hence the usage continues to be on the 22 carat, 18 carat. And also we've seen some introductions that have come out in the market of a pure 24 carat gold jewelry, which, which what we've picked up from the consumers should be a great area of investment. Because the consumer who's buying pure bullion will love to convert or get pure gold in the form of jewelry.
Okay, all right, Manisha, glittering gold and
All that
shining
glitters
silver.
is gold.
And no Midas touch here. All right, thanks Manisha for that. So that's on gold and silver prices, which just continue to rocket. We need to take a short break on that note, but we'll get you more on the markets. We'll in fact connect with Naveen Jindal, chairman at Jindal Steel, once we're back. Stay tuned.
Welcome back. Let's talk about, the metal space now. Naveen Jindal, who's the chairman at Jindal Steel, says India should aim to produce nearly 500 million tons of steel by 2047 when it becomes a developed country. He tells Abhimanyu that there's nothing to worry even if the US tariffs on steel come by. Let's hear out that conversation.
We have to take our capacity to 500 million tons by 2047. So when India becomes a developed country, the per capita steel consumption is going to be around 300 kgs. So we will need more steel to be able to provide a better quality of life to the people. Better infrastructure, houses, cars. So all these things cannot be done without steel. So steel has a great future in India, and that's why steel industry is very, very enthused, and we are contributing our best to the making India of our dreams.
So speaking of overall greening in the steel sector, of course, there are initiatives which are already underway. But on the other hand, we are also looking at the possibility of carbon tax and EUDR, several legislations which are coming up in the Western world. We are also facing the prospect of tariffs in the developed world. What kind of concerns arise and what kind of opportunities exist according to you? And what kind of action can be initiated by the Indian government to help the steel industry tide over such concerns?
Okay, so you have raised a lot of important points. All the points that you raise are very, very important. So as far as tariffs are concerned, say if US has slapped 50% tariff on Indian steel, anyway we weren't exporting much steel to USA. Okay, we can export to the rest of the world, and we ourselves, we are a 1.4 billion strong population, right? So, and there are a lot of possibilities of increasing the steel consumption within the country. Then he spoke about decarbonizing. So decarbonizing, Government of India also is encouraging the steel industry to decarbonize, to reduce it, its carbon footprint. So it's a journey that we all have to go through. We cannot do it overnight, and not only India, all over the world, the steel companies are making efforts to achieve it. It's not something very easy, but in the times to come, as technologies develop, we will also achieve that. And as far as opportunities in steel industry, I think steel is very, very, steel has a very bright future in India. And amongst all the large economies or all the large steel producing countries, say China has a negative growth rate, and India is growing at in double digits. So India is the only bright place for steel, I would say, in the world, and we are confident in the next 2 decades also it will continue to be so.
So my final question to you, the minister spoke about new opportunities in sectors like shipbuilding. What kind of domestic value addition and capacity addition is being looked at to ensure that the steel industry can thrive and possibly ensure that a higher capacity leads to more output and not idle capacity?
No, of course, there are lots of opportunities, like the Honorable Minister spoke about shipbuilding, that India must, there is a worldwide, there is a shortage of ships, there's huge demand for ships, and shipbuilding is very labor intensive also. So there's a lot of potential for making more ships in India, and that way we because we already do make high quality steel that is required for shipbuilding. So that is one area, and there can be many other areas also, like in buildings also. He spoke a lot about that if we have more and more prefabricated, we'll be able to do the construction, whether it's of homes, high-rise buildings, office buildings, etc., much faster and in a much more environment-friendly manner.
Welcome back to Halftime Report. Now, moving on to an exclusive behind the scenes at the National Stock Exchange. In conversation with CNBC-TV18, NSE's Ashish Kumar Chauhan looks back at how in 2014 India had just 1.67 crore investors. Fast forward to today, that number is nearly 11.8 crores, with a quarter of them that are women. Market cap is up 7 times in that period, and here's a slice of a conversation that he's had with CNBC-TV18.
When Mr. Modi took over in 2014, because that's the time I still remember some numbers, India had 1.67 crore investors.
Wow.
Today, India has 11.8 crore investors, unique.
Right.
Both.
Right.
Because those are the NSE numbers, right?
Right.
11.8 crore investors, 25% women.
Right.
That's 8.5 crore or 9 crore households.
Right.
And that's almost 25% of India's households now.
Right.
Right. And that time India's market capitalization, when he took over, was I think 67 lakh crore.
Right.
Today is 450 lakh crore, right?
Right.
So both have gone up 7 times.
Correct.
Right. And that tells you how much of India has become middle class.
Right.
Because you come to the markets to invest, and there is a perception that has been created that India, I mean, most Indians overtrade.
Right.
That is not true, because 11.8 crore investors, once you have invested even in one share,
Right.
you don't trade every day. You can trade once in 10 years and still you are an investor.
Right.
But out of that, around 25 lakh, maximum 30 lakh people trade in derivatives.
Right. Right.
And so literally 2% people trade in derivatives.
Right.
And out of them also, most of the people, I mean, almost 85-90% people,
Also trade in
they trade in
equities as well,
and
cash as well.
Yeah, so it's like they're buying insurance, right? And so for me, lots and lots of misperceptions get created.
Okay, and NSE's Ashish Kumar Chauhan also takes our colleague Prashant Nair through NSE's National Operations Center. Take a look.
This place is what we call business knock,
Right.
where all the companies that get listed or IPOs that happen, or daily price bands of companies, the new derivatives, contracts getting introduced in equities or currencies or commodities or in bonds, all that thing starts being set up. Even sometimes we have to set up a new broker, or sometimes we have to actually stop a broker from functioning because of the SEBI regulations or orders, or sometimes even specific investors are not allowed to trade by some of the court orders or otherwise. So everything happens here. But during the market hours, especially between 9:15 and 3:30, this people who are working here have to do nothing actually. They have to just monitor, and it's like an autopilot. If they are doing something, then there is something has gone wrong, right? So that is where physical manual sort of override is required. Otherwise, their work happens 24/7 by 365 days.
Right.
During the day, they are not supposed to do anything, but end of the day, they have to create files, download to all brokers, then they have to prepare for the next day all the new contracts coming in, the price bands, other things, 2%, 5%, ASM, GSM.
The much awaited Bhav copy comes from here? Or?
Absolutely.
Right, you can catch excerpts of this conversation through the course of the day and the entire conversation at 5:30 p.m. And all green screen at the top of your heads. You can have the Nifty Bank Mid Cap, Sensex, all of them doing well, just below that 25,000 mark for the frontline index. We leave you on a happy note at 1 on Halftime Report. The team of Business Lunch takes the markets forward after this short break.